Okay. What's this one? All right. So if anyone's there, can you just let me know if you can hear me okay? I've got a feeling it's just I'm pretty sure it's okay now. More people coming in, so we're in the right spot. It looks like anyway. G'day, Andrew. Thank you very much. Sorry about all that. So the issue was, it's just if anyone knows OBS, which is this, that's the streaming program we use. So you put all your details in there. Now they went and didn't update, and there's a link which goes to the YouTube channel, which basically pushes everything to the YouTube channel that we've got up and running. The link was different. And of course, I went and posted in the wrong link the first time, and now we've got it all up and running. So we're in the right spot, the right YouTube channel. I think I was posting it to my own YouTube channel, so which I don't use, to be honest. So anyway, sorry about all that. We've got the little issues all sorted out. So, Pete, g'day, mate. How are you? Not sure if you're at home. Or you're still, yeah, you're still stuck inside, aren't you? So how's everyone going anyway? Been stuck inside on lockdown? Well, social distancing, I think they call it, don't they? Hope we're all doing okay, and that's a good time to get a bit of study done. It's a good time, a bit of analysis on the markets, to listen to a few different things. So always a good time to get it up and running while you've got time on your hands. So for me, I'll do more trading than usual because I don't have to worry too much about the kids. My wife's home. She's actually on holiday. She's a primary school teacher, but they're still unsure of where they're going to go back or not, which just does not make any sense to me. Um, no one's allowed out. Everything's closed down. Bars, restaurants, all that sort of stuff. But yeah, teachers, you can go back next week because you won't get the virus. You won't get infected, and kids are immune apparently, according to the government. So it just seems a bit nuts. So my wife's she's not sure whether she's going back next week. I think it's Tuesday or Wednesday, the first day off, and they've all been prepping for this online teaching, yet they don't know what they're doing just yet. It's just disorganized. We really should be sticking to a plan, not telling them a few days in advance that it's going to change. So anyway, she's home and got the kids under control, which is something I can't really do too well. Yeah, well, I'm just playing around in the markets and trading here and watching what's going on. So I thought what we would touch on today, I mean, we've spoken about this a few times, but it's kind of, look, the markets at the moment, there was a big, strong open today. We saw the Dow futures pop up. We saw everything. I mean, Hang Seng popped up. That's actually up. It's doing all right now. I'm just keeping my eye on that because I think potentially could bounce. I've been trading first trade of the day, intraday was on the SPY, and for some reason, my strike rate, my first trade, if it's on the SPY, is nearly 99% wrong for some reason. So I try to skip a bit. Sometimes you just can't help yourself. So I think it was now what did I do? I think I went long. I was watching it. I just didn't expect the strength, and finally decided, okay, pull the trigger, go long. That's where it made a little minor double top, turn around, stop me out. The other, I think I made 4 other trades after that, which made it all back, or the loss back plus a bit more, which went all right. And I think it was one on the Dow. I was short on the Dow from the highs, which kept, you can see that's getting supported. So anyone that was watching that, let's just go through it. Might as well touch on it. So if you've got any questions, just give me a yell. I've got a feeling this is going to time out. Let's just see if anything comes up. Oh no, all good. So this was the Dow futures. We're on a 5-minute chart. So I was short off here, but it was off for 1 minute. So it's kind of aggressive, which I wouldn't suggest. And right now we've probably been stopped out with this rally back up, but I think I took a short off here. Looking for this minor shoulder here. Get that, that's probably a bit quicker. So in the shoulder here, I was short somewhere around here. So sat through all that heat and then kept watching it between a gain and a loss and a gain and a loss and so on. And then we got this breakdown. So I was looking for that because, you know, if you go back to the 5-minute, that extension up towards those highs, you had that first sort of gap up on the open and people would have been shorting into that and it was getting soaked up and you could see it getting soaked up. I don't know if anyone knows much about algorithms. And I mean, I don't know a lot about them. I know that they're out and playing at the moment. You can just see it in the action. You can see it in the price action. You can see why anytime it sort of pops down, they get soaked up, and it's generally against consensus. So not too many people, I don't know about you, but I didn't expect this gap up with strength on the open. And the only thing that could have been a bit of a heads up was the fact that the SPY was up for the overnight session, 40 points or so, and the rest of the markets were down. I mean, nothing much happened over the weekend to give me any mood to be positive. It was all actually negative. The US is getting, you know, smacked around with their number of viruses, you know, spreading, number of deaths, all that sort of stuff. US jobless claims, maybe that's the only thing we've seen what it's going to be this month. We have to wait a month. So in that month, potentially bounce. So I think the algos are out while it's a thin market, soaking up and expanding, you know, just ramping it up. This could be a setup for the night when the US opens. I mean, it could be pure and simply that the Dow gaps up, we're getting dragged higher by the Dow, and then they come up, open, and smash it back down again because they're, you know, funds or whatever are trying to get out rather than get in because it's not looking good. Those numbers, what we saw, that unemployment data on Thursday night, if anyone was watching that, that was a lot harsher than expected. So I think that's what I was talking about on Friday, when I did a stream on Friday, just that short stream. Now I was talking about that number that I was watching that the night before when it came out. It was an hour before the market opens, the actual share market opens, got smashed down and then turned around and got ramped straight back up again. Now that's not a good sign. I mean, not that it's a bad sign, but I mean, that's a sign that things are getting manipulated, algos are out, because as soon as they get smashed down, they turn back on, basically, and ramp that price higher into the open, and then the actual index itself retested lows and finished on its high, which you shouldn't really have happened after those employment data come out. The thing is, the big number was the following night, on the Friday night, and if you were going off that action, potentially you would have bought off that dip. The problem is, after the number, when they come out, I think down 700,000 as opposed to down 100 for expectations, and you see the unemployment rate jump from 3 point something to 4.4, I think it was, or whatever it was. It jumped 0.5%, which is kind of massive. You know, when it shifts next to nothing most months, and that's what they'll. I mean, obviously, we're all waiting for that unemployment data in the US. We know that they're going to get hit, and it was a lot harder than analysts expected. So whether we've come on today and go, well, okay, the next number, don't expect it to be too harsh because it was all done in the first sort of month, or the first figures that come out, which was Thursday, Friday. Maybe that's what the market's thinking. We're ramping up. We've got some room to ramp up a bit, squeeze out anyone that's still bearish, or anyone that's been selling into it on Friday. It's a bit of a squeeze on maybe now. But I'm always skeptical when I see these sorts of moves on the open and ramping up on the open. It's just going to hold it into the European session in the US and then thump down. Who knows? Could be wrong. Probably going to be wrong. But either way, that I didn't expect that strength on the open. So I mean, that was, like I said, that not getting that strength on the back of, I couldn't really see any news. If anyone's saw anything, just let me know. Put it in the chat. If you did see a reason why it was, you know, gapped up strong. Negativity is still around. The job losses I would expect to accelerate. I don't think we've seen the worst of it at all. and corporate defaults. Just forget about it. We haven't seen that start. I think that's going to play out, and that's going to, really pressure employment data in the US. They could be getting hit a lot harder than what we know. Um, so I think there's still a bit to play out, but that doesn't mean you can't get a squeeze, because everyone will be sitting on the sidelines. If you haven't cashed up, if you manage to cash up early and you watch it come down when you're not on it, great. That's what whether luck or not, whether I call it skill, whether it was luck, we got sold off just before, cleared out our positions before it sold off, and then we're sitting on the sidelines waiting. I think there'll be a lot of people waiting for that bounce, and if you're not, if you're sort of that trader where you buy the dips, this is a great time to buy, then if the consensus is like that, we could see a big bounce before we get potentially the big, another correction down. And I always say it, remember the GFC was the same, big sell-off, 50% retracement, and everyone was thinking we're out of the woods, and then they got the big move. I'm not saying that big move is going to happen, but I really do expect a retest of those lows. Whether it's after a bounce or now, who knows? And that's the toughest part. And it's a tough part. It's going to be a real tough part to sit through a rally if it plays out without trying to chase it higher. But if you can sit back and, like I said, answer the questions, are we out of it? No. Coronavirus still spreading? No. Jobs numbers have just started. There could be a lot more weakness. Yeah, I'm thinking that. So why would there be a bounce? I think it's just a bit of a bounce up, a bit of a short squeeze, and then another sell-off. And if that sell-off comes and we retest the lows, great. Then I think that retest of lows could be the time to get in. I mean, I said all that before. We'll just see how it all goes. But this sell-off today, this rally today, I think it's computer driven. I don't believe that it's any. I don't see any news. If anyone does see any news, just let me know. Nice work, Pete. So that if anyone does see any reason why we should be, up where we are, apart from a bit euphoric buying, then just chuck into the chat. I may have missed it when I don't really look at the news. I'm just looking at the price action. So that was, I think I was shorting. Where did I short it? I shorted about here on the Dow. So I think I had a loss in the SPY, which was, it looked stupid when on a 5-minute chart. On the 1 minute, it was looking like a pullback. It went again. I bought it, just didn't go up through the highs. I expected, that a really good push up to sort of these previous highs at 71. Didn't play out. I got caught on that pullback. So I turned around, went short the Dow, grind all the way back down to about here somewhere. So it was only about 90 points on the Dow, which is handy on most days, but today it's not. On days like high volatility like we've got lately, it's not a massive move, picking out 80 points. But I mean, that made back the loss, essentially made back that loss. And I think the rest of the time was basically another pop. Just took a short spike on the buying into here, spike on the SPY, which is still going now, which is a bit of a bummer. And I think on the Hang Seng, I had a long on the Hang Seng just up here. Obviously, it looks better on a shorter time frame, but that's pretty much it. So net up for the day. For some reason, if I trade the SPY first, it's always a dumb trade. I don't know why, how. I think it's just eager to jump back into the market, and then once you're in, you start to see things a lot clearer. And that's the way my brain works anyway. I think I potentially have to take a hit before I start seeing things a bit better and start watching and be a bit more patient. But anyway, I'll probably be done for the day, and I'm up slightly, only I think it was 20 points net on SPY. So we'll see how it goes. So that's it. That's crude oil. You can see that press down there. Now with crude, it will be another 28, same length as first. Could be. We'll have a look at that in a second, John. But I'll go over the overall SPY. The problem is, I mean, I don't know if anyone remember. I just remember sitting through the exact same thing through the GFC, and I've said it many times in the past. We've probably been waiting. This is what it was like in a way. You get that smashing, and then people were picking the bottom the whole way down, and I just cannot. The way I was trading back there, and that was what 2000 and into 2007, start of 2008, getting crucified. Thinking it's the bottom, and you listen to other people. Now I've got a different outlook on the markets. So and it's going to be hard. Triple O. We'll have a look, mate. We'll have a look. Where am I? So oil. This is, that would have caught a lot of people out. Rally into the close, gaps down on the open, purely because you got basically Russia and Saudi at odds, and that's what sort of drove that crude market down below $30, well below $30, down to 20, nearly $20 a barrel, $21 a barrel. I think the market was getting over optimistic about something happening between them, as in doing a deal, supporting the market. But I think Russia are just like, no, they're not happy still. And there was meant to be some meeting over the weekend that's got postponed. That's why you got the gap down. It's just whether or not we get a lower high in here and we press down again on crude. That's what I'll be looking for. I just don't see why this could come up and take out those highs and just keep going. Even though I know that I'm not getting much of a chart there. Let's have to go over to, what am I looking for? Is that it? Oh, no, that's it there. Crude oil. This is, you've got a lot of resistance level. It's just blew out through that resistance level about 28, $29 a barrel. Don't be surprised if we get some sort of lower high here and we come back down to retest or retest some lows going forward. I don't think the market, I wouldn't expect to be popping up on crude oil, popping up before. I think they're talking about Thursday, the date where potentially cutting output on oil, but I just think there's too many. Russia are not having any bar of it at the moment, I don't think. And OPEC want to cut to sort of buoy prices, but I mean, that's what we're expecting with this move down. Once we got through this basing pattern and started to lift, we're expecting that to rally, but I just think there would have been quite a few longs built up that's just been squeezed out with this gap down on the open. So I'd still expect some further movement down. I mean, could be completely wrong. I was looking for a deeper retracement here to jump into, and it didn't. It just took off. Basically, from the minute I said it was a pullback, look for a pullback, it just went straight up. So we've been looking for that rally. It just probably missed the opportunity here with that spike and then the secondary spike. But hey, I don't think crude's out of the woods just yet. And that's my view. I could be completely wrong. It might just rally, just keep on rallying up. But we'll see. Now, what was the next thing I was going to look at? John, you're saying on triple O, the index. Let's look at the index. Let's look. $25. Yeah, I don't think so from here, John. I think what I'm expecting after this sort of action today, say on the ASX, I'm expecting more of a pop to clean out some shorts. I think if everyone's thinking it's going to go down, you generally get it going the opposite way. I mean, because you're either positioned or you're not. You're either positioned short or you're not. I mean, that's it. And the market needs to put people on the sidelines and then drag them back in. So I think there could be a whole bunch short ready to get squeezed out, and probably this action here. Let's look at it on a 30-minute chart. This action here, you start to look. I mean, even I was thinking this was going to roll over and go through 5,000 today, but lo and behold, pop. This could actually squeeze out all the sellers from the last 3 or 4 days, and you get another bit of a run up. Don't know just yet, but we could take out 53 and have a deeper correction, and then you'll watch. Just watch people get squeezed out. They'll look like they're going to miss the boat because you got that first pop, they missed it, it's gone sideways. They're looking bearish. They might be selling into the market because they think it's going to go, and all of a sudden they have to turn around and buy it, and you get that squeeze. A deeper correction, for me, that's where I would expect another push down, and that could be, from that high to low, taking it out. But at the moment, just go out down to, that was quite a severe move down. Sorry, I just got the kids home, so they're on something wanting me to type it in. So where are we on the ASX? Yeah, I'm expecting some sort of, we've rejected this level. I mean, you can look at it on a monthly. We rejected there. We're starting to get, you know, a couple of green candles on the weekly, and then a bit of a pop. We're sort of consolidating here, and that could be another pop up, just to squeeze. What it needs is to drag in some more buyers, because people are always looking to pick the bottom. Everyone's trying to pick the bottom, thinking, people would have tried here, tried here, tried here, and I think the fact that it's such a deep correction, the deeper the correction, the more likelihood I would expect. I'll just draw it up. Um, so this is, get rid of that. When you have, oh, let me just say this is the market. It's popped up and we've got a rally here, and we're getting into that corrective mode. When you get sort of not a fairly mild correction, that's where I think you would get a bit of a grind up and then bang. But if you've got such a deep correction, don't forget everyone's looking at your stochastics, all that sort of stuff. You tend to have sharper moves back up. Okay, they're not so mild, and I think we've sort of just bounced off those lows. Potentially, everyone's looking for that to grind down. Everyone's really looking for taking out those lows. I don't think it can do it in one foul swoop, because if you're not out by now and on the sidelines, you're either waiting to go short or you're waiting to go long. I think we just need to flush out a few of these, build up some shorts, flush them out before we roll over. So I'm sort of, look, it's a tough one. I thought we might have retested the lows before we had a bit of a grind back up, but it looks like after today, the market wants to sort of have a bit of a corrective move higher, just to squeeze out some shorts, put people back on the sidelines. And what it's actually doing too is building up some sellers. So it wants to build up some sellers that it can turn around, and once they've got to get out, build up some buyers, they've got to get out to buy, sell it back into the market. And if they can build up enough, or if the market sort of generally builds up enough, and it runs out of steam, grinds a bit up, grinds a bit higher, runs out of steam, say 58, I'm just guessing here, then that might be enough fuel that they've got to dump it back into the market. I just don't think, I don't remember anyone, remember that GFC, that was a GFC. Let's just see if we can show you what I'm talking about here. That's it, got a weekly. You don't see that sort of move there. We could be somewhere around here. I mean, we could go down, retest the lows and grind back up, or we could have been, somewhere around here where you get this sort of grind up. What it'll do, and this is on the weekly chart, don't forget, that just gives people a bit of confidence, start to load up long. I mean, and then you get back up. It's a deeper correction. I think that move down, that rally back up, there was roughly 50%, whether it was 50% of this move down or off the highs, I'll have to check. But either way, that popped back up, and then you've got, and I remember sitting in meetings this is back when I was working as a broker, sitting in meetings, listening to them talk about we should be in buying, and this is what you'd call professionals. I don't like to bag them too much because I know a few still, but when the markets, especially shares, you're making money on the long side. You don't make it on the short side much. I mean, there's ways to short the market, obviously with futures. You short it with CFDs. You can short it with a number of things, a number of product warrants, anything. And that's why there's always talk when you get market sinks. They always talk about short bands. They always do that because it just means they know that it takes the pressure off the short side, and they're just trying to cover their butts, proverbial. But I mean, what shorts also do is they've got to buy it back, and shorts don't sit there. You don't tend to want to sell it and hold it for a month because you know that there's savage corrections all the time. So if you're looking to short, you're inclined to take it off real quick. If you're buying, say this is a downtrend, you're not willing to short it for too long. All right, but if it's in an uptrend, people will buy and hold every day of the week. So it's just a different mentality. And to short, it can have, I think, I mean, this is my theory, shorting can have an adverse effect. By banning short selling, that means when the fear kicks in, you've got no support from shorts that have to buy back. All you're getting is everyone bailing. And then, the market sells down, and whoever's buying it from them, where you get that pop, it doesn't go anywhere, then they're bailing and bailing. It's just that cascade effect. And that's what you got through the GFC. Absolutely got smacked down. Now, that was probably a little bit over the time period was a little bit less savage. But I remember sitting there when you got this bounce and everyone's saying we should be going long. And I'm like, oh, I didn't really know, to be honest, but the people I was working with, the people I trusted said, no, we could have another leg down. And it's hard to sit through when you're seeing this rally. And that rally, don't forget, was say 52.50 to nearly 6,000, 800 point rally, 800 point rally, even off that 5,000 level, 800 points, or nearly 1,000 points. Um, it's hard to sit through that if you're not in, so you're going to probably take a chance and dive in. But what you saw then was that as soon as it started turning, you know that anyone that's been buying here know they're caught on the wrong side. And looking at that chart, I look at that now and say that was a perfect just pull back to the MAs. I mean, it was 1,000 points, but it was a pull back to the MAs, the moving averages. And you can see, we can drill in on that a bit further. I'm on the daily chart now. You can see the sort of the swings we got. I mean, it takes out the highs in here, sells back down, pushes back up. People were expecting that sell down to go again, turns around and wipes them back out with this push back up, and then straight down. There's no lower high to work off. What we like to say, the shoulders. This was a good shoulder to work off, and that was a perfect shorting opportunity. That push below the MAs, pop back up, push back below the MAs. And once it starts holding the MAs, that was a selling opportunity. Got smashed down here, back up again. What you can see back up, that was probably about early March, and then it got smashed down early March in 2008, and then it rallied. You got that secondary rally, so there would have been tons of people thinking it's just washed out that low. Okay, we're going long. That's the end of it. It's just you can't help it. It's because the ASX is built to go. It's not built to go down. It's simple. So when you got anyone that's talking about shorting, they always want to ban it because they think that's going to take the pressure off. But don't forget, any short has to buy it back. And the fact that shorts don't last, more than potentially a couple of days, no one really has a massive short on the index and will happily ride it down for months and months because the opportunities to do that, this is the second opportunity in my trading life I've seen. First was the GFC and second is now. If you're going to ride a short position like that. So they're very, very rare. That's why everyone knows indexes are built to go up. They're not built to go down. So if you're on the short side, you don't want to hold it for too long. Even if you think this is a market crash, if you've got that mentality, then it's not the first time you've thought that. You probably thought it was going to crash here, and you've held it, and you turn around and take a loss. You probably thought it. Let's just get back here. You would have thought potentially here, selling into here. If that's what your mentality is, way back here, what was that? Coming to the end of 2018. If you were bearish, you thought, okay, this is it. We're going to come down. We're going to sell down. That's it. And you turn around and you get squeezed back out of the market. If you're holding for a couple of 100 points or 300 or 400 or 500 points, because that means your risk has to be bigger. You can't just expect to have really tight risk, say 50 points when you're going for a 200 point gain, 4-1. It just doesn't work that way. So that's what I'm saying with this kind of thing. I think markets are basically built to go up, and basically taking shorts off is sort of a recipe. If you've got shorts, they have to buy back and they have to support it. And I think when things get choppy, any shorts, they're not going to be holding for very long. And they have to buy back. And that's just extra support. I mean, if the market's going to go where it's going to go, it's going to happen. No matter what, you just want it to. The thing is with shorts, they have to, like I said, they have to buy it back and they're fuel to buy back. And if they can start to support it, they start to see a level holding, and there's enough, that means just more liquidity on the sell and the buy side. I think that's a good way to support. I'm not a bit of, as you probably know, I'm not a very big advocate for banning short selling. I think that leaves it open. If the pros can't short when it's going down, they're not going to worry about trading because they don't think it's the bottom. It leaves it open to too much. I think those sudden moves down, that fear driving the market lower. So that's just my little rant. Now I've got completely lost of what I was talking about. I got sidetracked pretty big. But we're looking at John's got 2,800. So for me, we'll have to go back to that monthly. I don't think we're going to go to 28 from here. That would take it back down, pushing the ASX back down to sort of these lows back from 2003. I don't think that's going to happen. If we take this as a bit of a, let me just get where am I? Here we go. As a longer term chart, this is the ASX. Let me just close that computer. Got my laptop sitting in the way. if that's the case, that's sort of the lows we're looking for. There's potential that we're seeing it. And the fact that we rejected right down, it means that it's some sort of level that people are looking at. We've washed out that zone just below 5,000. That was a previous high low. But always remember, depending on the chart you're looking at, this is I'm on a monthly chart. That big flush down took out that low is what you'd call a flush. And it was basically targeting sort of this support level, this rising support level. I mean, it was hard to figure out, it was hard to see when it's live, but you've got to start just drawing up your levels on the market when the market's starting to fall. If it's falling like it does there, even in here, you're trying to find a level where it potentially could find some support, and you want to be working off, your trusty, especially when it's getting smashed. You want to be working off a high low. Never try to buy on a dip, because if you're trying to buy when it's coming thumping down, I guarantee you there'd be people saying, "Look, I bought at 40 when the ASX was trading at 4,500 on the legend." They would have bought, here, 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 here. I guarantee you. Unless it's 100% luck they bought there. There is no technical reason to buy on that dip off this chart anyway. But what you see is when it comes smashed down and it rejects the most recent high low, which was in here. Let's just clean that up a bit. When it rejects this zone on that monthly, there's potential for it to come back down and retest somewhere around 47.50, which would mean another 300, 400, 500 points down. There is potential for it to do that, but you want to be dropping the time frame, because at the moment, this is just a bounce. It's pure and simply a bounce on the monthly chart. If we drop it down to the weekly, it's still a bounce. We've got a couple of green candles. We've got rejection there. The market's starting to grind its way back up. We're oversold, so that everything could be in place. I mean, we haven't got a high low, so dropping it down to a daily, we haven't even got a high low really on a daily, I would suspect. And that's why people are expecting it to potentially roll over. And if everyone's expecting to roll over, don't be surprised if we bounce, if we push deeper. Okay, and that would be, working back to that weekly, you go a bit deeper and then potentially bang. It's everything at the moment is, we're trying to guess what's happening. We're not, we've got to be patient to see it play out. We've got to be patient to see the price action. I'm not a big fan of just diving in there. I'd never dive in, just waiting for that bounce. I don't know if anyone remembers. I think it was over the change of the year. Was it this? Oh, it was here. No, it was here. So when the market was getting sold down there, we got stopped out of our positions, watched it come down. And then as we turn around, I think that was basically the day after Christmas. That might have been, it was the day after Christmas. It basically bounced. That was a low before Christmas. Once we come back from the break after Christmas, it started bouncing from there. Never looked back. Now, for me, we didn't get out of that until about here. And you can see why. I mean, that's my traditional trading. You've taken out a couple of levels on the way down. We had a bit of a squeeze, and we're now sitting on top of the MA. So basically, as soon as we broke up on this candle, I was loading up long, because I know that we're coming out of the woods. I mean, you can say I didn't pick the bottom, don't care, because I know it was a lot safer trading here than trying to pick, because anyone that's going to pick the bottom here has done it. That wouldn't be the first time they've done it. They've done it here. They've probably done it, in here. They bought it in here, turned around, got squeezed out. Did it here, got squeezed out. So third time lucky, they got, so really, for me, what they're doing is making back losses, or they're holding positions that are well underwater. Yeah, they've got out of jail now, but then if you go back to now here, they would have done exactly the same thing. If you've got that sort of mentality where that's how you trade, you try to pick the bottom, I guarantee you there's always going to be a time when you get crucified. Okay, so that's my mentality at the moment. So we didn't buy back in, started in February, we started loading up, going long again, because the underlying index was sitting back on top of the MAs. So that's your buying opportunity. If you're looking at any trade, that's exactly how we trade. Once the MAs are back on the rise, the 20 is above the 50, and you've got prices starting to sit on that 50, it breaks the upside, bang, you're long. And that's exactly the way we trade shares, we trade indices, trade futures, anything. So that's what played out there. We got this big grind up. We managed to make some money on this push back up for the last year or so. And then it essentially fell off a cliff. So if you're picking the bottom here, there's no reason why you haven't picked it here, here, and here. Didn't know that was going to be that savage. So all we're trying to do now is try to step back in time frames to see what could be going on. And we found that, actually, let's just get that chart back up. Here we go. This is potentially what's playing out now. So don't be surprised if we get a retest of those lows, or, it could go, it's an each way bet at the moment. And if you turn bullish, here, I can understand if it breaks through these highs at say 53 from here, where are we now? 52.26. If we break through this high just in here, say around the 53 mark, yeah, there's a reason to go long. But you always have in the back of your head that it could easily turn. We might get a bit of a squeeze up for a couple of 100 points and then get crucified back on the way down. Or there's an equal reason to argue that we're going to go back through 5,000 and retest these lows. Now, if we start heading south again, which I was sort of looking at, if we start heading south and go through 55,000, I thought we might have done it today, to be honest. We could grind lower. You want to watch the price action on the way down. And it's different when there's an absolute capitulation like this, or are we going to start doing this, as we grind down? Now, that's different to something that just goes bang straight down. That there is absolutely no buying standing in the way of the sellers, whereas this is buyers standing in the way, soaking it up. All right. So they're two different things. And that suggests to me that we're going to start to bounce and we're going to get that higher low play out. This suggests to me that we could do the opposite, grind up and then get smashed. So at that stage, there is potential for this play out. The way we've come down so hard with really no, even on the daily chart, there was no real, we got down to these lows. One green update got rejected. Next day was down. Then we got another update. And by the time that this red candle played out here, everyone who was buying the last few days knows they're on the wrong side of the market. And then you break through the low, and that's where we got that acceleration. Of course, people can't help themselves. We see a green day, thrown straight back out of the market again. Green day, thrown straight back out of the market. So that's made buyers weary, and that's why you're getting this bit of a grind back up. But this action's a bit different to what we saw on the way down. So now all we're really trying to do is assess what we think could happen. And there's two things, up or down. It's as simple as that. Up, if we go through 53, we could retest this high at 53.66. But I'm sort of thinking where if we grind back up, there would be people that have seen this move down. They've got caught a few times. And look, it happens every day of the week. They see it go down, so by the time they go short, they're picking the bottom. They're shorting into the bottom. You can't do that. You've got to wait for your price action to play out the way you think, to show you some sort of strength. And that to me we could easily spike up from here. And I really wouldn't be buying into a share portfolio then, because I still think when you start dropping it back timeframes, when it's out of the woods, I think I want to see a retest of 47 or roughly. And I want to see potentially a 47 hold. Flush out this low here, which is around 48, flush it out and pop back up. And I think that could be a decent enough correction back up again. But we'll see. We'll see for shorts here. If we start to roll over and we grind down, just like I said, like this type of action, let's just draw that up. Oh, actually, let's just snip. Because we are, I'm a big fan of looking at overbought, oversold. I know you can stay at oversold, it can keep going up, you can stay overbought, like here. Oversold here, and it just kept going down and down and down and down. So you don't want to trade off at 100%. But I'm a big fan of, if it's getting a bit oversold and we start to see price action has to confer with this. Otherwise, if you're just buying because the market's oversold here, like you've done, like I said, we've been oversold since that first green candle. We're oversold, people bought it, squeezed out, bought it, squeezed out, bought it here, squeezed out, bought it here, squeezed out. It's happened 5 or 6 times already. So I'm not a big fan of just buying because it's pure and simply the market's down there. It has to show me some price action that I'm not the only one on the sidelines waiting to jump in, and it hasn't shown me that just yet. Even if we break up through these highs, it hasn't really shown it. You want to see a test of sort of towards those lows, and you want to see that hold. If that holds, that could be a trigger to start looking at some shares to jump into, and then managing your risk accordingly. Because I think if we start to retest these lows and we start to hold, say 46, 47, and we start to push up again, then great. So if we're in here, you see that price action that's gone all the way down. That's that move down here. Then we've got a bit of a bounce. We're starting to see, well, we'll just draw that up slightly. Sort of a bit of a grind up here. You can see why that move pushed down. It hasn't quite cleared that high. And we're starting to sort of a bit of a grind. I mean, at the moment, it could do two things, one or two things, which is quite obvious. It can go down or go up. There's nothing in this recent price action to say that this is going to drag us all the way back up to the highs and then we forget about it. There's also nothing to say because it's so, we've been squeezed out. There's a lot of people, if you're not out by now or you're not decided to hold everything and put it in the bottom drawer and forget about it, then it's a bit silly. So we'll just see the fact. I do think if we're going to see a lot lower levels, we're going to have to flush out some of these sellers, flush them out with a bit of a pop, which we could easily do from here, and then watch for your lower high and then smash straight back down again. Or, if we're going to see this is the bottom, we want to see the sort of that towards that support tested. So if I can just draw that back up, that support tested. So you've got two things. If we just change colors, you've got something where it could have a deeper correction, and then you look for that lower high, or from here we might go down and you want to see sort of that short-term action. So this is your key high low off this low, somewhere potentially 46, 47, and start to hold and then go up. And that's where you probably want to be, buying, whether you buy the index or whether you buy increased volume. Yeah. So you want to, what we've seen, if you've seen a lot of these stocks, say this is a stock and you've seen a big flush out increase, so the volume would have been increasing here on the way down. If this is decreasing on the way back up, and you do get that secondary flush, like we're talking about here, and then the volume starts increasing, yeah, by all means, that increasing volume matches up to that higher low, matches up to psychology, that level is going to hold. And then anyone that's shorted it now on this move down off, say, 54, 53, is in line to get squeezed out of the market. And that's what we're looking for. Hopefully that makes sense. I'm just trying to analyze. I mean, at this stage, it really is. It's guesswork if it's going down or up or down or up. We've just got to figure that out. Be another 28 front, same length as first, arriving at 25. Yeah, John, that's what, for me, this is what's, we just go out to that monthly. That support zone through here, if we can hold up here, I'm sort of looking for a bigger correction. And this could be the same as what, so we didn't do it here. So this is the GFC. The GFC sort of come down to the MAs. We've just plowed straight through them. That's 2 months. 2 months went from the high, got through this high, plowed straight through it. All right, and that market washed off a hell of a lot in the last couple of months. All right, whereas the GFC sort of grinded lower, and then we got that bounce, would have dragged in a few buyers, buying off there, looking for it to repeat and go straight back up to those highs. Away we go. Everything's great. Instead, flushed them straight out. So whether this is the flush, I mean, this is the hard thing. This is the hardest thing about what we're doing at the moment. Is this the flush, which is equivalent to, I should show you. So that's the move. Is that what we're seeing there? Or do we have to bounce a bit and then have a secondary leg down? And that, it doesn't have to be equal and opposite. We could take us back down to 4,000, and then we could retest these lows at, 3,200. I don't want to scare anyone, but it's just, this is what, at this stage, this is what we have to have going through our head. It's not just buying on the dip. This may not be the dip. This might be, that was a dip. If you bought there, and you got crucified on the way down. If this is our low, what do we want to see? At the moment, just say if that's a low, just draw that up. If that's our low, the market's come down, and we're at the moment, we're only just bouncing off it. We're probably a bit bigger bounce than that. We're only just bouncing off it. So what do we want to do? I want to see, obviously, potentially that retest and hold, and then go up. What I don't want to see is a bit of a grind up, because when it grinds up, for me, that's not confidence in that move up. And that leads me to believe we get something like this, a GFC type of move. We just get smashed down. And there, I can guarantee you, when it's grinding up, everyone's loading up on stocks because they think it's cheap. Everything can always get cheaper. I'm a big fan of waiting for confirmation. Now, like I said, when was it the start of 2019, when we saw the low just before Christmas, day before Christmas on 2018, and then it started to recover from 2019. I had to sit on the sidelines watching it rally, which, is fine. I'd rather be safe than sorry. I mean, you don't have to pick the bottom. If anyone says they're picking the bottom, it's not. It's not through skill. It's through pure luck. Nothing else. And I'd rather be skillful than lucky, because lucky doesn't always run. It doesn't always work out. Well, 90% of the time, you're probably not going to work out. So yeah, this is what, if we get this sort of grind up, I'm looking for that secondary leg down, and then you're going to see how it reacts again at these lows, whether this is the one that's going to hold, because it is, we have come down from 7,200, say, down to 45. I can't even, that's 1,700 points. Is that right? No, 2,700 points, isn't it? 65, yeah, 2,700 points. So that's a decent correction off those highs. We're always going to get a bounce. The market is always going to think that's the lows in place, and we'll jump in. We want to see, pretty much most things will retest. Even this market popped up here, and then we went down lower. We got back down to here before that was kind of the end of it. And once it starts to fail, and we get this action pop up, and you got this is the key one. That's where I've got to draw that in a bit better. That is ideally what you want to see. Fail to go down further. There's no reason why this was a double top. The market's pressed down, but you can see it took out this low, and then it started to re-establish that low again, that higher low just here. This is all over the period of a long time, but that's what the market may need to do, repair itself. We don't know. I don't think the worst is over just yet. Not saying it's going to go back through 45 and we're going to retest these lows, but that's a possibility. We have to take each day or week as it comes. It's a bit of a rant there. I got completely sidetracked, but anyway, I'll look at John's. We've seen triple O. So long story short, do I think it's going to 25? Don't know. I don't want to. I'm not going to trade off it and bank on it. Right here after today, it seems like the market wants to have a deeper correction of this move down. Just the way, pure and simply the way we've gone today. I didn't expect 161 points up today at all. I've traded it, but didn't expect it. And that caught me out when we had the first bounce. And of course, like I said on the SPY, I got caught out in the first trade long. But yeah, that's what I didn't expect. So yeah, we'll look at those, Pete. So triple O. Better shares, oil. Does it open? I'm not sure what would open later. It's probably got to do with crude. What time does it open? 10:59. It might be the fact that crude opens later. I'm not sure why it opens, to be honest, John. Yeah, that was 11. It's probably 11 o'clock. It might have something to do with oil prices. I don't know what crude oil index ETF currency hedged synthetic. I don't have any profile on that. Oh, here we go. Seeking to provide investment results corresponding to the price and yield performance of the S&P crude oil index. It may be the fact that I don't know what this is. I've never seen it, but it may not trade until 10 o'clock. No, what time do the currencies open? 24 hours, but it'd be interesting if you can get excess return with a currency hedged against movements in the Aussie. Anyway, it'd be interesting to see if you can find any information. I don't know. I've never traded that before. Yeah, 12% today. It's doing all right, isn't it? So what do we got? SHV. To me, this is just going, you can see the market. It's got smashed. Bargain hunters have managed to get it up. 50% retracement that move down. Do we need to go and retest to get some more confidence back to 6? Or are we just going to blast off through the highs at 750? For me, I would find that hard to trade through 750, go long. Only because I'm a skeptical person. But yeah, I wouldn't expect that could be holding below the MAs. Big blowfly, someone's letting flying around. We may get this lower high hold below, say, 750, and it could be, I'm not being an alarmist, we could completely grow through 5. We could be falling short at 656. We don't know just yet. But at the moment, just by looking at the daily, that bounce there is kind of extended. It's bounced straight back to the MAs. So what that's doing is leaving people are in two minds. You've got the bulls People are naturally bullish or naturally bearish, you know, and the bears are going, I'm a legend now, but they've been wrong for the most part of the last few years. And the bulls are just looking for it. Okay, that's it. It's all over. We're going back to 9. Say on select harvest at the moment. So this is the problem. You don't really want to. This is where if you manage to get off those lows, you want to be really tighten up your risk. And if you're wrong, you're wrong. You take a small profit. If you're right, it does grind back up, and you can tighten your risk as you go. If you're coming new to the market, there's nothing here that's saying to buy or sell. For me, if we can put in on this, let's just get back. If we can put in, let me just show you what I'm talking about. That should move down. Don't be surprised. It probably is somewhere around 50%, 50% retracement. I'm just eyeballing it. It's about 50%, so it's 55, 56, just bouncing back to these highs. So for me, there's two things. If we can hold this low, and we sort of, so at the moment we've got a, I'll draw it in blue. This is the move I'm looking at, up, so down. We retest those highs. We've taken out this minor level, you can see, and we're bouncing. There's two things that can happen here. I mean, it could clear to me, I wouldn't be buying this because I think this could easily roll over, and we're looking at this most recent price action. But if I want to buy it, I want to see a high low put in. So we've got this price action here, pull back, retested that high basically up here, and we have a deeper pullback. Okay, we're just bouncing back. So that's about where we are at the moment. If I wanted to buy it, I'm looking for something that's going to hold above this high low. All right. And I want to look something like that. That's ideally what I'd be looking for. And I think it needs some time. And I think that would match up nicely with a bit of a bounce in the ASX. That's where I'd be buying. And I know exactly where my risk could be. And I'm not risking too much. And I know where I'm going to put my stop loss for it to attack on that high. Because just because it's taken out this low doesn't mean it's turning completely bearish. You can find some charts, tons of charts where if I can't get through that, you know, that's essentially a double top. It drags in sellers because people look at the double top. It's not in context to the overall price action. Because really, this move up here, there is no anchor. The anchor's way down here, so there's got room to move. Flush out a few of these longs, flush them out, reset, go again. Or we have a deeper correction, you know, pure and simply we go down. And that's pretty much it. From here, we just go down, take out this low, which is around 670 or so, and then, you know, have to reset. But at the moment, we haven't reset. We've just pushed down, bounced. That's it. So I wouldn't go long or short just yet on select harvest, but that's what I'll be eyeballing in the coming few days or so. DCN, Goldies are not quite going to plan, I'd suggest, because I think there'll be a lot of gold bulls that doesn't look flash at all. To me, it's trying to get soaked up here, where we are, you know, around these lows around 130.40. But I wouldn't go long here because it also flushed out this high. So there's two things that would keep me. Maybe it's just me being tentative. Don't care. Done all right. I think that it's about long-term survival, not short-term gains. All right. So that's the high. To me, that is a flush of that high, and we've got these lows where we're sort of there at the moment. So that's sideways action, and it's not trending higher and it's not trending lower. It's not in a pullback mode just yet. It's basically going sideways. And you can argue that's, you know, we've headed down, we've rallied up, and we're consolidating this high. Or you could argue this is a lower high. I mean, if you can't see it clearly, forget about it. So at this stage, Pete, DCN, I'd be just concerned because crude's not playing out just like we expect. So what am I talking about? Crude. Gold's not playing out to expect. I'll see if I can get gold up. You know, I don't know where I've got it. Maybe I've got it here. Here. XAU. So gold has had a big run up. We managed to get on board that. I think we got stopped out. We got stopped out here with a flush through the low, which was frustrating when you saw it go again. But over the longer term, it's turned out to be all right. I was looking sort of this level. We've turned and bounced. It doesn't mean that it's going up. It could mean that that's the level. We don't know just yet. I don't think it's playing out. A lot of people on this move up here when the market was falling apart, it's gapped up, have got absolutely squeezed out of this market. So gold has gone in tandem with the overall market. And if you go back to the GFC, I think it did the same thing. So it's not always a safe haven. All right. So when the market's just, it's going up and down and up and down, the typical moves, if it's had a good little run up, say 40% over the last few weeks, and then it pulls back, gold will tend to go opposite because we haven't got that complete fear that's gripping the market. Now, when fear grips the market, no one wants to be in anything, to be honest. I mean, gold stocks get hit just as much as any other stock. It's not typically a safe haven. And that, if you go back and look at the GFC, same thing happened. I'm pretty sure the same thing happened. The market was selling off, and it was not far off when the market started bouncing. You get all this chopping around on the index where gold started to rally, and you probably find that the same thing happened. Flush through the highs, completely dropped like a stone. And I think we were talking about shorts up here once it started to break down, because just because the index is going, it doesn't mean that gold has to rally as a safe haven. There's other safe havens to go to which are a lot better than gold, I'm guessing anyway. So what we saw here was that bounce. I don't know whether at the moment, this is going to play out and we're going to start to get some weakness, but I'll be concerned about a push through that low, which is somewhere around 16. So a push back below 16 from here leads me to believe that this leg up is starting to fail, and this leg up was a major lower high when you go back a time frame, say to the daily. Just go to the daily, check it out. That makes sense. So we could easily on the daily chart, if we start to push through, it was about 16, I was just saying. Through 16, we're starting to fail at a lower level. We're sort of in that overbought territory. The market's struggling. It should really, if it's positive, it should go through, but it's not. We could have a deeper correction and then reset on gold anyway. And if that's the case, forget about trading your gold stocks for a little bit. But that's the way I'm viewing that. What else we got? I'm a skeptical person by nature, I think. What have we got? What have we got? Go to the 30-minute chart. So you can see how this has changed too, by the way. There's a lot of algos that be trading this, chopping around. You can just see it was completely different to the action around here when it started to lift. It rallied. As soon as you get it you can just see that it's really wicky during the day, up and down. It's just cleaning everyone up. You've got all the algos that come in, and I don't know if anyone believes in them. I do. It happens. There's computer systems that run all day, all night, chop people around. They're not after a massive gain. They're just after, consistently making money every session. And that happens by getting people to sweep them out. People who are going short. I was actually looking for a short potentially into gold, and it didn't play out really. And then you start getting this action holding higher levels. You go, okay, it could be another squeeze on. Then your shorts are built up here. Sure enough, it played out. So this could be a key lower high we've got to keep an eye on. And you're going to get that. You're potentially going to get a bit of a grind down to support. And then you might get a thrust through, bounce back short into that first sort of pullback, like this. As I'm talking about, thrust down, take out the level, bounce back. So anyone that's shorted on the break of that level is getting squeezed out, turn around and reset it at a lower level, lower high with the MAs, and then down. Okay, so markets, don't forget, it's going to keep finding liquidity. And it happens a lot in futures, not so much in equities. You're sort of lucky if you've ever had a background in trading futures, the market will continually find liquidity. By that, I mean, anyone can see at this stage, the market's sort of rolling over. That's your lows in place, and everyone's going, okay, we break back down below 1590 or say 1600. I'm going to sell on stop. The market knows there's going to be sells down there, ticks them off, turns around and traces, and hopefully it gets enough people that have sold on stop, getting them back out and stopping them back out when they have to buy back into the market, and then it turns around and rolls over. All right, so you've got to be wary of all these sorts of stuff, sorts of things when you're trading. The market, especially futures, currencies, all that sort of professional traded, like I said before, the indices, say on the ASX or the Dow, they're generally made to go up. All right, they're built to go up because stocks get bought, they get sold. Not so much like the futures market or the currencies market. It's got to whip you around, and you just got to be wary. You're not buying on the break of the low. You sort of wait for that. If a lower high, like I said, flushes down, if this was going to rally from here, I would expect, if I can draw it, through a support zone, I would expect a deeper move down and then come back and then work off a higher low. And that's what I would be looking for. If that's the case, that's what I would expect through support, rather than flush out the support by a few points and then have a deeper correction, right? Straight back to the MAs. I would expect something like this. Flush them out. It's going to catch a lot of shorts, who are going to be shorting into that market, expecting it to roll over. Catch them out. As soon as you get that high low, that's where you want to enter, because you're looking for these sellers to get squeezed back out and put back on the sidelines, and that's where you make your gains when it reverses on them. So that's probably about it for gold. Let's just get rid of that. So, is there anything else you want to have a quick look at? Did I cover this enough for you, John and Pete, DCN? I wouldn't be taking this either way, long or short, just yet, just because gold's moving. Now, what was it? We were trading, I put a long on. Anyone that's long, by the way, what was it? What was I trading? What did I just put a long on the other day? I come back here. God, I forget, don't I? Not the Hang Seng. Oh, yeah, no, the Hang Seng. Was that it? Yeah. So the Hang Seng was, I was looking at this. Okay, we bought, what was it, through here at 23,210. Now, around that. So really, the idea is, because just forget, if you're trading at CFDs or you're trading futures, they'll all be slightly different pricing. I like to put this is the CFD price, but you've got to look at the futures pricing. So if the futures pricing's popped up through here, if we can find that, let me just go back. No, that's not it. Where am I? The futures pricing. I'm looking for HSI. There we go. So this was the move up. We got long in here. It's come screaming back down again, and it didn't trade the 22. So it's taken out this little low, but it didn't trade to 250 on the futures. So what I'm essentially looking at is you've got to try to look at the levels apart from the pricing. I didn't say that right, did I? Not so much look at I said to buy at 250. You've got to sort of match that off where the lower high is and pick your sort of an entry level and where you're going to get stopped out at. But it really didn't trade. The futures, we saw that push up through here. So we're getting long in there at 210, which is just above. Where am I? It was above that high, wasn't it? How come I can't see that high? Oh, we have to go that. Yeah, it took out that high. And then that pullback, it's taken out this high low, which, okay, if you got stopped out, so be it. It's a bit of a bummer. But I'm sort of looking at that price where off the futures, and it didn't trade to 250 on the futures. So, we're still running that at the moment, which more for, I'm not going to put in the statistics, but more for those people who have got, there's all different CFD pricing. It's different from IG, is different to CMC, which could be different to anyone else, that pricing on the CFD. So it's better off just to go from the futures pricing. So the pricing, actually, you would have seen it. You may not have got ticked off here. You got ticked off here with this little pop-up on the futures. And then your first pullback and then rally. And you got that pullback, which didn't trigger the stop. I think the low was 40. No. What was that low there? How come I can't see it? I'm missing something, aren't I? All right. I'm just not seeing it. So that low was 29.70. I'm on the right one. Yeah. And it didn't actually trade. I think the stop was at 950, 22,950, which it didn't tag on the futures, and it sort of popped back up into the close. And obviously you got this gap up, which just seems to be consolidating at the moment. Whether this is going to trade back down again, who knows? So yeah, we'll see. I'm running that position. We're not going to add it to the stats at all, but I'm happy to keep alerting to that to see if it can kick off, because I know that there's different CFD pricing across the board. Trade Direct might have a different to CMC, who might have a different to IG, but it's all going off the underlying index, which is the futures contract, which is you know, in the futures contract. Didn't trade the 950. I said, well, what was the stop? I keep forgetting, don't I? It was 950, wasn't it? Where are we? Hong Kong. 22,950, yeah. But on the, actually on the, we got down to 43, 44 on Trade Direct. So technically, if you're trading off the Trade Direct charts, you've been stopped. And you got in at 210, which is that push through that high. But if you haven't, if you're trading off, you could be trading off someone else that didn't reach down there. You got stopped into it. You didn't reach down and get stopped out at that price. So just be wary of that. I thought I'd just touch on that. Considering it's still in gain. So if you've actually long that, maybe raise your stop. Basically, you can put it at break even just below this this zone in here. Let me just draw that up. Draw that up there. Just before, you know, it's not it. If you want to just raise your stop, just to lock it in at the moment, or lock in a minimal loss or a small gain, I'll put it at break even. You know, that way, if it does kick off and go straight back up, then you can raise it, or you might want to raise it when you can do whatever you want, really. But I'll be alerting to that the way I'll be trading that. So I think I'm pretty much going to alert that soon to put it just below these higher lows, because it's, you know, we've got this gap up, gap right up here. It's come screaming back down again. Retested, pop up, retested again at a slightly higher level, and now it's starting to go. So there is reason to be, you know, put your stop there, because if we can't trade back up to these highs tonight or the next couple of days, this could be a lower high and it's going to come down. You're going to do the reverse of sort of this squeeze up, you're going to come screaming back down again. And that's where you don't want to get stopped back down at this 950 level when you've been able to protect just the entry. All right, that's probably about it. Is there anything else? If I missed something, does anyone quickly want to take a look at something while we're last few minutes? Sorry about the bit of a mess at the start. Yeah, look, I would probably, if it starts to fail here, I'll just take half off. I like to do that, because then you can do two things. You either let it all go and raise your stop to break even, then you know it's going to frustrate you if you turn around and get stopped out when you're up 200 points. Where's the stop? Where's the entry? 210 roughly, 215. We're up 200 points, 250 points on that. You know, with regards to the stop, it was probably about 2 to 1. Sorry, 1 to 1. So you're about 1 to 1 now. I mean, you can take half off right now, but I'll send out an alert soon, Pete. Anyway. So I hope people still long that. To be honest, that's a good little trade. It's just that flush down on Friday, which is annoying, and that's what, you know, a lot of people expect after the numbers, that the employment numbers on Thursday, it's going to pop. Employment numbers come out and it sank, so it's caught everyone back on the other side, the wrong side again, and it's consolidated just above that, around the previous lows, which was from what, Wednesday, Thursday. So yeah, I'll send out an alert soon, Pete. Anyway, but yeah, I'd be happy to take, if you're on that, take half off, tighten the stop up to break even, and just let it go, see what happens. Nothing wrong with that. Crude, be interesting to see if they can get back up to highs. I don't think so. I think it's stupid if it does, but stupid things happen. That's probably about it. Our SPY, look at our SPY going. So, what did I say I had a long? I had a long in here, which makes the exits look stupid in hindsight, but you don't know. All right, guys, we'll probably call it a day there. Thanks for joining me. We're back in on for the usual stream back in Monday, but just be wary. I'll be doing a few different streams. Might do a live stream tomorrow, the next few mornings, just for 20 minutes or so. We'll see how that goes, but want to see if we can get some live trades off while we're streaming, and see if we can just do some live trades. I think we had a good one on Friday. Don't know if anyone caught that Friday stream. No, I don't even remember where it was. We might have had this little bounce. We had a little bounce on Friday. It popped up, I think. I can't remember what it was. That wasn't it. Would have been, it was this bouncing through there, got up to the highs, and it turned around and, no, that's not it either. What am I talking about? Oh, it's in here. So the trade on Friday, which we did on the stream, go back and check that out, was really just, the reason for the entry was, I don't know, there was a bit of a support zone through here. You can see that pattern. If anyone can see, you call it W, pops up. That's your high or low. So as soon as you get that high or low, you can take a break. You don't know where it's going to go to, but that was the trade, which we did live on Friday. And basically, it stuck around there for too long. I just wanted out. 20 points, looking for a bit of a, what I was looking for was the same sort of thing again to see if I can get a deeper push high. But being a Friday, I was concerned that we're going to get suckered into a long and squeeze back out again, because I don't think there's too many people now going to hold positions over the weekend. And sure enough, that sold off the rest of the session. So it was a good little trade. Check out the stream if you get a hang of it. It's on, it'll be on TradingView. If you subscribe to us at TradingView, which is just trade_setup, I'll show you the actual. So it'll be trade_setup. Subscribe to us there, and you'll have a whole lot of videos. You should be able to check out the streams. Get on the streams, and there was somewhere around here. There's probably a few that have come in. So these are the people I subscribe to anyway. So you'll find us in there. If not, just let me know, email me, and I'll send you off the link just of that stream. So anyway, that's it for today. Enjoy your week, and if you want to know where to find us for these streams, if it comes on tomorrow, just send me an email and I'll shoot it out to you. All right, guys, enjoy your day. We'll speak to you soon.